Hey, good afternoon, everybody. Yeah, in last week's meeting, we were looking for the crude oil market to do a little bit of a pullback to that 84.50 area in the nearby futures, and the liquidation event that we had on fears of China raising interest rates helped us get to that target. So again, here's the continuous crude oil chart, and we seem to have kind of reestablished a new downtrend here. Again, moving down to that 84.50, which was the highs we were looking at from the breakout 2 weeks prior. And at this point, we're actually going to look for this market based on last week's friendly inventory data to make a retest of last week's highs. But I think a move maybe up to that 87.50 area should be sold into, looking for a deeper pullback. We've seen a very quick navigation on this December crude oil chart of almost a $5 range here from last week's highs to last week's lows, and we feel that if this dollar index holds this resistance that we see above us right here short term, we're going to see a quick move up, but we want to sell into that, looking for a deeper pullback really to what would be the uptrend support. And we feel that that's probably the buying opportunity that you want to look for, staying long a little bit longer term as we move into December here. So still looking for more of a sideways choppy trade here over the next month, but we do feel that this is probably a market that you can trade from both sides. And if we see the down move first and a continuation of last week's selling, we still would not be afraid to step into the buy side here. We've got some tight gasoline supplies out in New York on the East Coast. That's keeping the unleaded market pretty firm at this point. And if this RBOB market can take out last week's highs, which it potentially is staying pretty close to them, we could see this crude oil market take off again. Now, again, we had a little poke through 87 on last week's highs, but we couldn't get a close above it. So we still feel that if we get a couple solid closes into this range, that we could make a quick move towards $100 shortly after that, based on the range that we had during this time frame. So we're still going to keep that $100 target longer term in the forecast here. Moving into the dollar, it does appear that we're working on trying to get this thing to bottom. We've got a lot of jumpiness right now surrounding interest rates and debt concerns in the Eurozone. So there's a lot of things that are going to keep this market volatile short term, but we've been able to clear the 20-day moving average. We've been closing above it pretty consistently. We've got this 50-day moving average just above us, and that may be why this market's having a hard time accelerating through some of these highs that we've seen in previous weeks. But again, we have not been able to close above these highs. If we can get some solid closes, we would like to get into this market from the long side, but we are going to wait a little bit to buy it on a move higher. Otherwise, a move back down to the 20-day moving average at this point does look like a buying opportunity for the dollar.